Today, I unwound my short natural gas position, unwound my short the stock market position, and sold my favorite bond fund. Yes, natural gas was absolutely higher when the market opened this morning, but I was plenty happy to unwind the rest of my short position and was very happy that I did because natural gas up big, at least as of almost 2 o'clock this afternoon, making an unconfirmed breakout above $3.66 a cubic foot. If it can close below $3.66 today and close meaningfully higher tomorrow, that would confirm the breakout in my opinion. And natural gas from there could go to $3.94 a cubic foot. Even if it confirmed the breakout, I still would not chase natural gas, but that's just me. I unwound my short the stock market position this morning because we just couldn't seem to really get any movement. And mom and dad love buying stocks, and I really did think, and maybe it still can, but I really thought that the S&P 500 could hit 6,000. So I said, hey, let me get out. I get it. I just went short yesterday. I'm already out of that trade. If I need to get back into it, I can, no worries. Again, though, my bear market rally target high of 6,000 still stands. Again, I still say we can get there, but hey, maybe we are finally breaking down. Then I say we can come down to 0.2, the first target low at about 57.75. Then maybe a small dead cat bounce higher to 0.3 at 58.10. And then the next leg down to reach target 4, the second target low of about 56.15. That is not my bear market low. My bear market low is at least 30% lower than the all-time high made in February. I happily sold my favorite bond fund this morning when yields opened higher. Remember, there is the inverse relationship. When yields go higher, bonds and bond funds go down in price, and said, you know what, plenty happy to get out, and glad I did. Yep, absolutely down off of the highs so far of the day in these yields, but we'll see what happens. Still could easily bounce anywhere between this previously confirmed breakout area between 4.54% and 4.43%. Of course, with all of these trades, I'm immediately letting my members know what I'm doing. Gold nicely higher on the day. This is great because other than holding bonds, which I have held for quite some time, and a lot of cash, as of literally right now, gold is my only other trade. I'm long gold, so this is great. We are still in that previously confirmed breakout range between $3,320 an ounce and $3,239 an ounce. To be even more bullish, I would need to see gold first close above and then another day close meaningfully even further above that $3,320 an ounce level. Let's see if we can get gold to go higher. And if you're really paying attention at home, you're just saying, John, okay, you're showing me that gold is rising. That can be a bearish scenario in a bear market, but yet yields are rising. And in a bear market, yields rising are good. That means that people might be selling some of their bonds to put it into the stock market. So two completely conflicting items happening here in the market. And I say, yeah, it's been one of the things that has been made investing make it so difficult over the last couple of weeks here. And of course, mom and dad are buying stocks like crazy. They bought a net $4.1 billion worth of stocks on Monday in only the first 3 hours of trading. That is incredible. The biggest buy on record, again, before 12:30. This is according to JP Morgan data and the Kabasi letter. Retail investors also broke the 4 billion buying threshold by 12 noon on Monday. Absolutely incredible. Happened for the first time ever. Mom and dad accounted for a record 36% of the trading volume yesterday alone, exceeding the previous record set in April. Meanwhile, according to Bank of America and as reposted by the Kabasi letter, institutions are selling at a record pace. A net 38% of institutional investors were underweight U.S. equities in early May, the lowest since May of 2023. Over the last 5 months, this percentage has fallen by about 70 points. In other words, the biggest drop on record. Other than 2023, this marks the lowest allocation by institutional investors since the lead up to 2008. We all know what happened in 2008 and 2009. So who do you think knows what's happening here? Who wins out? Do mom and dad know what's happening and do they win out by being buyers? Or do the institutions win out by being sellers? Who wins? Let me know in the comments. This is not investment advice, and if you don't know me, I'm John Crocker, professional investor, proud American, cigar lover, and owner of Crocker Capital, LLC.